So welcome to the webinar, and let's get started. Let's first do the questions that have come up in the channel, and then we're going to go over current charts. So we're going to check Nifty and crude oil when we get to the charts. Do you or have you ever come through a phase in which you don't get the feeling for the market or feel like you can't recognize trends? If you feel out of sync, what I would recommend is that at the end of the week, you go through your charts with a replay or just go through them manually and see if you missed any obvious trades. And that should help your pattern recognition if you feel like, or something that is also what you can do is that you just take a week off. Sometimes you just need to refresh. And after a week of not trading, not looking at charts, not doing anything trading related, you come back and often you see things differently. But what I would recommend first, you do a replay of the week and you'll see and you'll check if you missed any important and obvious trades based on your strategy, and make sure that you are very clear about the rules that you have in your strategy, the signals that you look for, you have a good strategy plan, make sure that's all in place. Yeah, and that's how I would deal with that. Thank you, by the way, Rigster, for jumping in and providing some help. Shader, where do you see Bitcoin heading? Will it overtake the all-time high? And how high Bitcoin price could reach in upcoming year? Well, to be honest, I don't look at charts like that. I just look at what is currently happening. Where's the candle today? Where was it yesterday? Where was it 2 days ago? Where are the levels? What are the setups? Beyond that, I don't look at charts in any way or form. So unfortunately, I cannot provide an answer because I don't have this long-term horizon for any chart, Bitcoin, S&P, your normal Forex pairs. I never look at a chart beyond a day, beyond 2 days. So yeah, that's more of a investing perspective, and this is here more about trading, not about investing. And I don't think anybody has a clue. There were 2 questions, I think, here. I'm looking at US 100 and I can see a relevant resistance zone and a possible fake out. There's a divergence also. My idea, if the fake out happens and when a push to the downside breaking small support, mark with risk, I start looking for corrections on the lower time frame to find an entry. In this case, does this make sense to you, or would you prefer to wait for price to reach an important level? We do have some supply in here, right? So we do have some type of level. When we go to US 100, what do we see? All-time highs. Let's go to a lower time frame. Yeah, so here's the supply area somewhere in here that the market actually dipped into. This is the divergence that you've spoken about. The price did break, oops. The price did break this level. Was this the one that you marked? Yeah. So yeah, for short-term trades, that could be an idea. You had this fair value gap here, not a 1 to 3 pattern. For the 1 to 3, you want to see the price break above the breakout level. That's important. So here we just have a general break and retest pattern. Where's price going to go? Obviously, no one knows. That's the first one here. Here's a second area of interest. So if you're in this, you might consider this a take profit. Your question, is this enough? Or would you wait for a level? I think this qualifies already here as a level. Ideally, you would like to see also price move into the daily high. So a higher push today would have been great. But due to the big candle that we have seen yesterday, that didn't happen. Because it was just a huge candle here yesterday, right? The big sell-off. But we do have good confluence here level-wise. I think that's good. I personally would have preferred to look for the market push into the daily high to look for a short, but yeah. Also, if you're looking for 1 to 3, that's not a 1 to 3 since you're missing the push into this. So you're missing 0.3 essentially. You just have a regular breakout pattern, break and retest, but your analysis is good, spot on. Hey, Biko, I'm just at your question. So I think overall good analysis, I think very valid. Just depends then on how you execute. Do you go with the retest? Do you just trade breakouts? Do you wait for the 1 to 3? That's then a little bit of personal preference, but overall, you are on the right track. Daily time frame after yesterday, quite bearish, right? The pullback was not deep enough for me to look for a short, but nevertheless, solid chart analysis. Precise seems to be rejecting supply. In the 5-minute, I could identify an intraday fakeout. I forgot the term you say in the videos where there's a fakeout on a lower time frame. Not sure. I think it's also just fakeout. And what seems to be 1 to 3. Do you consider this a 1 to 3 with a fair value gap? So higher time frame. Let's take a look. I want to see what you marked. What is the time frame? 15 minutes. Ah, yeah, same supply zone as on the US 100. That's the one. 5-minute, and yeah, beautiful. That's the 1 to 3. You have your short-term fake out, right? Then you have your deceleration, acceleration, the evening star, morning star pattern. You break below those lows here. Then you dip back into this fair value gap. Yeah, the fair value gap is correct as well. What's your time frame? 5-minute. Okay, you mark this one up here. Yeah, worked out. Good analysis, I think. Yeah, this is totally valid. Again, it would have been much greater to have the price also push into the daily high here and then look for a reversal. But again, yesterday was a big sell-off day, right? We had a big breakout. And then today we didn't get a very strong pullback into the daily high. But other than that, this is absolutely 100% valid. Yeah, good analysis. Both charts very nice, although they are quite correlated. Yeah, it's just another protection mechanism, another filter to wait for the price to actually dip into daily high and low to look for a reversal. Yeah. But good analysis, yeah. Then before we go into my charts, there was a question, Nifty 50. Nifty 50. Start on the higher time frame. So this is what we said last time, right? Break and retest back into the highs. And now we are back in the range. Really range bound here the last few days. We did have a good sell-off here on Thursday. Taking out here the highs on Friday last week. Yeah, other than that, I don't see much currently. That's what comes to mind. But yeah, the daily time frame would put me off. There's nothing here on the daily time frame. Just really range bound. I think the Nifty is not a great market to trade. If you're looking for indices, I think the S&P and the DAX, they move much nicer. So I would maybe not choose this as an index, but look for other ones. There seem to be much better moving indices than this one. Crude oil. Let's take a look. All right, so here we have the resistance somewhere in this area, previous high. Today we took out those highs from yesterday, so that's a very good signal. Yeah. This is the takeout of the highs. But then on the lower time frame, I don't see much. We are back here now at this range. So I would have probably liked to look for a sell signal up here. But even on the lower time frame, even if we go as low as the 5-minute, we have to break into a new low here, but there was no pullback, right? So ideally, you would like to see a pullback and then a retest somewhere in this area, and then look for a short down here. But here the market just broke out and then never touched the breakout area again. And this is actually, it's a very nice higher time frame. You are in a range market, not quite at the boundaries of the range, but pretty close, and taking out yesterday's high is good. But the lower time frame just didn't give us any signals. And now, what is the plan now? Well, if we get a strong bearish close and keep taking out the low tomorrow, we might be able to look for more continuations, right, in this range. The market has been ranging here. So maybe another downtrending leg. If the market doesn't close bearish, I would be cautious with bulls. I would probably start turning bullish until or when we break this area here. So not a clear game plan for bulls, but overall not a bad chart, I think. Not a bad chart at all. Do you have any questions before I dive into my charts? Or do you want me to take a look at my charts? Or do you have a chart that you would like to analyze first? Or a question? Okay, let's just go through the charts. So I had 2 trades today. Aussie, I just closed. So the idea is on the daily time frame, we see good resistance here. The market poked into it already yesterday and rejected it. And then today, the market poked above yesterday's high. And I was looking for a short. I think it becomes much clearer when we look at the replay. So the market poked above yesterday's high right here. Then not much happened. We just made lower highs, but no follow through. And then we got the breakout, right? There was no fair value gap created, important. On the breakout, there's no fair value gap here that we could use, maybe a small one here, but this is not in the area where you look for it. You want to see the market push back into the breakout or above the breakout area. So this is not a helpful fair value gap. You want to see the market push back into the breakout area. So I didn't take any fair value gap trades. So I had to wait manually and look at the chart candle by candle. And if you remember the module about, or the videos about 1 to 3, is that first you need to see the market move back into the pattern. That's what happens now. And then very, very important is you need to see a strong bearish reaction. So you want to see the market actually show you strong bearish selling momentum. And that's then the trigger. And this came here. This was my entry, stop loss. You could have placed it above all the high here of today, but I posted above the 2 highs here. I thought this is decent enough. Target-wise, there is a big level down here. So I wanted to make sure my trade is out before that. I got 2.1, but then the market didn't do anything. Just after my entry, we immediately had a green candle, then a red candle, a green candle, and the market was not going anywhere. And I just closed it a few minutes before for the webinar. So that's where I then closed the trade. And yeah, that's where the market is now. Yes, I could have waited a little bit, but after the sideways period, I didn't feel comfortable anymore. Aussie, the Australian market is closed already long ago. European markets are headed into a close. I don't think there are any news anymore for today, right? So there was no catalyst to be found. We're going to see later at 11 p.m. the RBA speech. However, that's a few hours out, and I didn't want to hold the trade that was on a lower time frame for that long. So I thought, okay, I get a decent exit price, not a big loss, but the overall setup was not worth it in my opinion. So I took the exit. Well, if there was a fair value gap somewhere up here, then yeah, if there's a fair value gap, let's assume this is a fair value gap, I would have probably entered just right here, somewhere in this fair value gap, mostly in the middle of the fair value gap. But if there's no fair value gap, we wait for our regular 1, 2, 3 pattern signals, and that came here after the strong selling came back into the market. Yeah, sure. It's just a different style. The conventional 1, 2, 3 pattern, the fair value gap just layers another thing on top. Sometimes you're not going to find a fair value gap, but if the setup overall is good, I still am interested in trading it. Yeah, the more filters you have, the few opportunities you get. The other trade that I took was a lower time frame trade, was a 5-minute trade. But let's start on a higher time frame. So it was on the US dollar Swiss earlier today. The market yesterday really popped higher. I'm aware that the market is or was really, really bullish. So that's why I went to a very low time frame, 5-minute. And I didn't want to have a short for a long time because overall this looks really bullish. But I figured for a short move, it might be worth if I get a really good signal, right? So yeah, what we have is the move up. This is the yesterday high, the green area. Then we have 2 highs here. The market took them out. We broke here below the lows. If you want to mark them here, if you see that as a swing point, you can mark it here. Here, this is a 15-minute fair value gap. So sometimes you have to go a time frame up. What I avoid is going more than one time frame up. So if you trade the 5-minute, I go only to the 15-minute. I don't go to the 30-minute. Some traders do that. I am not such a big fan, but because then eventually you're going to just force trades. So here's the 15-minute fair value gap, right? Right here, 50% level. And then that's where I had the entry. Stop loss, close to the high, and then target-wise. So I definitely wanted to be out before we hit the daily low. So this was the current daily low. At that time, I definitely want to be out before that. I also thought, okay, here might be something to consider in those wicks, right? The price really popped higher here twice. So I put my target here, 2 to 8. I thought, okay, I'm going kind of against the higher time frame trend. The trend is bullish. I'm going short. So 2 to 8 seems good. Decent reward to risk ratio. I need to be right only roughly 1 out of every 4 trades to still make this a break-even trade, right? So I thought, okay, the odds are pretty good. And yeah, this then worked out quite nicely. A little bit back and forth. And yeah, the market did push into both areas. And I think by now we are a little bit lower, but I'm okay with that. Even if the market now went lower, this is quite the long waiting time for a 5-minute trade. A lot of things can go wrong, and you're going against the higher time frame trend. So that's the rationale behind this trade. Good question. So I have a very simple approach actually. So what I do is I start on the daily time frame. Whoops. And then I will just go through the charts one by one. I start at the top, and then I look, okay, are we close to a daily top, a daily bottom? So here we have taken out the daily high. So I would mark this with a flag pattern. Then I will go to a lower time frame to see, okay, where's the last swing point? So in that case, we took out the highs here. Here's the last swing point. And then typically I just put my price alert down here because I want to see the breakout first, right? That triggers my alarm and it shows me, okay, this is getting a little bit closer. Assuming the price is then trading here, I will look if there's a fair value gap. If there's a fair value gap, I will just put another alert into the fair value gap, or just set an order at my broker account. If there's not a fair value gap like in the Aussie Swiss, I will have to manually watch this. So those get then different colors, but that's the process. I just go down through the charts one by one. Aussie Swiss was taken out here, the highest, then okay, this gets a flag. I go to the lower time frame, Aussie Yen. Here, okay, this looks great because we are at the previous high point, even better. If we have some natural resistance, the market took out yesterday's high, great. I go to the lower time frame. You can see this is the level that I have. Here's the price alert that I already said earlier. The market didn't reach it. So there was nothing for me to do. And that's basically the approach. Okay, here we took out yesterday's high. We didn't take out yesterday's high, we took out yesterday's low. Again, here you would trade against the trend, kind of, because recently the market went down. This could like just a retracement here. The previous up move could just be a corrective phase. So if you believe you're in a downtrend and this is the next impulsive wave, you want to be really careful if you trade against it, but this is with the trend kind of, but we also bounced here off the support. So it's hard to read, are you in a downtrend or are you in a fake out? So then I would go to a lower time frame. We have here the daily lows. The market took them out. Here, very similar to, I think it was the Euro US dollar. There was a breakout, but the breakout wasn't strong enough for me. So just like earlier here, I was watching the Euro, but the breakout here wasn't great. And now the market just crawled over the level. So there's also no fair value gap. Not a great market, but this is basically the approach. Yeah, it's you should be very clear about what you're doing and when you're doing it. And if you can write it down, for example, check the daily time frame. What you can do is also just, it's a lot of manual work. If you go through your charts and then you set price alerts. So assuming this is our yesterday's candle, I'm sure there's maybe a script somewhere. You could just do it. Okay, here's an alert below. Here's an alert above it. And then you just wait for them to trigger. But obviously, if you watch so many pairs, it gets really tedious to do this every day on all the markets. So I'll just go through them occasionally, a few times a day. Sometimes I do miss trades, but that's totally fine. And then once the market takes out a daily high, what I find really helpful is that I flag them here with the TradingView flag system. So it gives me an idea of, okay, where do I need to look already? Where do I need to follow a little bit more actively? And then, yeah, it's just about waiting on the lower time frames. There are often markets where, was it here? Yeah. So here we took out the daily low today on silver. Good support level. Then I was looking at this after the market took out the daily low. Then I drew my resistance area. Then I saw, okay, here the market is just crawling over the level. That's not good. So I waited and waited and waited. Sometimes you can wait for hours at a time. Then we have the strong breakout. Then you wait for that. Okay, great. The breakout is here. You see, is there a fair value gap? Not really. Maybe a really tiny one down here. But the market never looked back, never came back, and then you have to let it pass. Unfortunately, sometimes this will happen. You're on the right path. You anticipated correctly the direction, but the market just didn't come back. But that's the life of a breakout and pullback trader. Yeah, it's quite objective. And you could, as I explained, if you've watched the last watch list, you can even use it as a trend following approach. There was something I wanted to show. I missed this one. I think it was a Swiss pair. Give me a second. Which one was it? Ah, yeah, it was the US dollar Swiss after all. So yesterday, what we had was that the market previously, we had the small range, right? We have the breakout above those highs here. And then we entered a range market. And yesterday there was quite some news, I think, right? Let me check. Yeah, we had some CPI data. So I was ready for a move. But then on the lower time frame, it just happened so fast. We had the breakout, and I did miss this. This would have been actually a perfect entry. Not a classic 1, 2, 3 pattern. Also not a flow strategy. So that's why I skipped it. Ideally, you would like to see a breakout and then a pullback back much closer to the daily highs. This is something that I'm testing because I saw actually that Konstantin is doing this similarly, so that he waits for the breakout and then he doesn't wait for the market to trade back inside of the daily high, like what I explained in the flow strategy. But he would have taken this trade. If it's above it, you have this beautiful fair value gap. Yeah, and you're going with the trend. So this is something that I'm testing on my own. But yeah. Yeah, that's what I said in the last watch list video here from the 11th, this Sunday. I showed how to trade the 1, 2, 3 pattern as a continuation, not only as a reversal setup. With some examples from last week. But yeah, those happen not often, not always, but they do happen quite a few times. No, this week I didn't trade any flows. If I have any more trades and they fall into the flow, I will show it in the watch list video on Saturday or Sunday. So currently this is still on my list, Aussie yen. There's probably not going to be anything anymore. Both markets, Australia and New Zealand, are already done for today. So I will come back tomorrow. Here we didn't take any lows, so this was never flagged. This was actually quite nice, right? Cat Swiss. But we didn't take out the lows. It was just almost equal highs. So I'm lost for the pattern. Tweezer, sorry. Yeah, the tweezer pattern. We had the breakout here. There is actually a fair value gap on the 15-minute. But yeah, because the market didn't reach the high, and this is a non-negotiable for me. If it doesn't reach the high, I'm not taking it. I don't use any indicators at the moment for this type of trading. It's only the daily high and the daily low, and this is the weekly and the monthly high and low, but that's pretty much it. This is quite interesting. CAD yen trading around those all-time highs here, but we don't see any momentum. Let me check the news calendar for tomorrow. Yeah, so tomorrow we do have a lot of news. Aussie. Okay, we have the British pound GDP, US dollar, but no CAD, no yen news. Maybe the US dollar news could trigger some JPY moves. But today, for example, you see there's just an inside day. We didn't reach the daily low. We didn't reach the daily high. Same here. Same here. We're just trading really in those narrow sideways phases on the Euro Aussie. So I would love to see the market take out the highs here. It's a huge level. And you can expect some movements here. But it's a waiting game. Daily momentum. Not sure what you mean. I think it's just, are you referring to just large candles or trends or? Ah, okay. Well, for example, when the market is in a narrow sideways phase, what was it? US dollar Swiss. So here, for example, we are lacking momentum. Here. We have just small inside candles. We are not taking our previous day's highs and lows. And the candles are generally smaller than the previous day. Then you want to stay away. And then here we have the complete opposite signal. Yesterday's candle was a huge momentum day. And you have to factor this also in. You don't, if you want to go short, you want to be quick with your exit. You don't want to hold on too long for a counter trend. So that's the distinction I make. I don't make it more complicated than that. I think it's really about keeping it simple. Here, Euro Swiss was interesting as well, like the US dollar Swiss, but we didn't take out the highs. We're just trading within this really, really narrow phase. And that's, I think, why it's so good to have this rule for the daily high low. You don't trade an inside day. You only wait for the market to take out a high or a low. And then very often you will see momentum come in. I think so many traders are looking at the daily high and low. I think also a lot of automated strategies and algos are trading with daily high lows as a reference point. So you can probably expect quite some movements, even better than if you get another natural support and resistance that lines up here. That could make that could give you another confluence factor. But I think it's good to stick with objective levels to look for on your charts and not have too many subjective ones. Here, this was great, but no setup on the lower time frame. Let's get rid of this. So we have this short-term area here. A lot of support. We even have a little bit of, well, not a little bit, we actually do have a lot of wicks somewhere in this area. So that's a big, big area to look out for. Then yesterday we had the breakout. And then today we saw the market take out the lows. Here you can see we took out the lows of yesterday, spiked higher, but the market never looked back. So it was a huge move. British pound news, most likely, right? But yeah, the market just never pulled back, and that's unfortunately going to happen. But it's still better than getting a losing trade. I don't make that distinction. I don't have it as a hard rule. But for example, on the Aussie Swiss that I've shown you my trade, I exited because I know, okay, the Aussie is already closed for today, the Australian market. And the Swiss market, European market is going into very late trading and about to close. So I know, okay, those markets are not going to be active. There are no more big news events coming up. So I know that there's not going to be big movements anymore. But I don't have a hard rule. Like, for example, when you look at the way Konstantin explained it in his YouTube videos, in ICT, there are what they call kill zones. And kill zones are specific time periods. It's the London period, mostly in the morning, or the early session in London, the New York Open, the first few hours in New York, the first few hours in Asia. Those are usually the market periods where a lot of ICT traders are looking for their trades, and they only trade within that period. But for me, I don't have that as a rule. I trade when there's a setup and when there's a move. But you can definitely incorporate that in your trading as well. You can see how it goes. And there are quite a few indicators that show you the sessions, and then you wait for the market to set up, but only within your preferred time frame. Early New York, the first few hours, London, Asia, depending on where you are and what market you trade, right? So here as well, lots of inside day action. Inside day on the Euro NOK. New Zealand missed the daily high just by a tad, but it's okay. We talked about this. I was looking at this, but on the breakout here, first of all, the market never pulled back. I was looking at this. I was waiting for the market to give me a 1, 2, 3, right? I wanted to see the market move back here. There was no fair value gap, so I would have to manually observe this chart. How about the 30? Yeah, even on a 30-minute, you can see there's no fair value gap. All the price action is overlapping, so you would have to wait manually, but didn't happen. And now, for example, I'm not going to trade this anymore. I'm not going to watch the Euro US dollar for the rest of the day because it's getting in my evening, and then, yeah, I don't want to deal with that overnight and everything. Make sense? Yeah, and that's it's a very simple strategy. It's also great if you don't have a lot of time to watch your charts. You could just have a few hours every day, 2, 3, 4 hours at the beginning of London, 2, 3 hours in the beginning of New York, and you just look at your charts. You wait for a push, and then you wait for on the lower time frames for a setup to unfold. If you work with pending orders, you don't even look at your charts that much. Well, I was never a true swing trader. I was mostly 1 hour, but I found the market is not moving great on the higher time frames these days. For whatever reason, the market is just very choppy on the higher time frame, very messy. So I would just adapt as always. I wouldn't say I'm a classic swing day trader, because day trading for me is 5-minute and maybe 3-minute. But yeah, I prefer to just have a few hours of concentrated trading time and then go about my day. Okay, I see this one, 1, 2, 3. That's a really large one, right? 1, 2. Very deep push for 0.3, but yeah. Yeah, worked out for you. For me, the swings are a little bit too wide, but if that's what you see on the chart, that's good. Stick with that. Any other charts you would like to take a look at or questions you have? Any trading related questions, that's the time to ask during the webinars. Make sure I didn't miss anything. No. Any questions? No? Are we good for today already? We do have still 20 minutes if you want. So the 1, 2, 3 pattern and the concepts are really fractal, which means that you could use it on any time frame. I'm personally not a big fan of scalping, so I will never go beyond below the 5-minute time frame. That's my absolute minimum. But you can use, if you feel drawn to it and you think your strengths are on the lowest time frames, 3 minute, 1 minute, maybe even lower, then yeah, try the strategy there. See how it goes, see how it feels. Some traders really feel home at the lowest time frames. If you trade the 1 minute or 3 minute, you probably want to pay more attention to opening times because that's where you get a lot of movements. You could just shorten your trading time to really maybe an hour, 2 a day. If you trade the 1 minute or 3 minute or maybe lower. Yeah, for me, 5 minute, 15 minute is not scalping. Scalping, I would say, is like 3 minute and 1 minute or even lower. Hey, can you turn on the market so I can see what market this actually is? US dollar CAD, okay, thank you. But it would be good if you can turn it on. Okay, so Bali, what are we gonna do with this? Is there a question or? Let's just do this then first. Euro British pound, when yesterday's candle closed, do you look for selling because the strong bearish candle? So yesterday, the problem is still that there's a lot of support here to the left, right? This is the one we marked. So yeah, it does look like a breakout to the downside. But again, you could wait for a 1, 2, 3 pattern, right? Which didn't happen. The market never closed below it. So you could look for that. Would be fine, yeah. Just be aware that there's a lot of problem here waiting for you on the left. But I was waiting actually for, after I saw this and the weak breakout, well, the breakout attempt, I would not say this is a breakout. I was waiting for the complete opposite. I was waiting for the market to bounce higher because I didn't feel that the daily time frame is really that bearish. Price at a big supply zone, broke the resistance. So now I'm confused. Is that just a pullback or resistance, or market will reverse? Whenever you're confused, it's usually better to just go to another market. Let's take a look. So daily, yeah, we have the resistance here and a supply here. So you have an issue, right? You have the supply somewhere in here. So if you're confused, what I would do is, for a short, wait for the market to fall back in the range. So actually today we have a good candle for that. Indecision candle, deceleration candle. So you could wait for tomorrow's candle to break the lows and then look for a continuation. For a long, you could wait for the market to take out the highs, or maybe if you want to be really safe, you wait for the market to take out those highs and only then look for longs. You could also wait for the market maybe tomorrow, take out the highs here, trade in the supply area, and then look for a fake out to the downside. That could also be an option, right? If you're in the zone, you don't have to trade right away. Just think about, okay, where would it make sense to trade at? A fake out on the Tuesday highs would make a lot of sense. We have the resistance here on our side. If we fall back inside of the range, look for continuations maybe. But yeah, right now I don't see a reason why you should be looking for a trade. But if we get a little bit more momentum, we pull out to either side and see the market moving, probably with tomorrow's data. And don't forget, we have a big news day tomorrow. So you're most likely not going to see a lot of action now. So that's quite natural to see the market just do nothing now, waiting for the news tomorrow, and then you get the big move. You're welcome. Cool. Take care, Biko. Good chart work. I spend a lot of time backtesting. I take about 1.5 to 2 hours per trade to find, enter, document my trades. Yeah, I would speed this up significantly. Entering and finding a trade should probably not take more than a few minutes. When you record a trade, you can really reduce it to the absolute basics. Probably you want to have the time, direction, the setup, and then the outcome really for maybe 2 or 3 outcomes. And that's really all you need in the beginning. Of course, you could track so much data, but in the beginning, the backtest is just about getting in the reps, working on your pattern recognition and seeing how could this have performed in the past. You don't need to get super detailed on the record keeping. It's really about getting through a lot of trades in a short time. The power of the backtesting and the purpose of backtesting is really just to see a lot of trades in a short amount of time. Of course, you don't want to rush through it, but when it comes to record keeping for your backtest, really reduce it to an absolute minimum. Like what you see in the flow strategy, I go through a lot of trades in a short amount of time, and that's ideal because you see a lot of setups. You can fill your Excel sheet or whatever you're using quite quickly, and then you have a good amount of data that you can work with. But yeah, if you just depends also if you're just starting with the backtesting, it will take obviously a little bit longer. But if you've done backtesting for a few times, you should see how you can optimize your workflow, spend less time on unnecessary things, and move through it more efficiently. Okay, fair enough. Yeah, so Well, I still think you shouldn't spend 1.5 hours for one trade, but it's going to be a little bit longer than if you are already experienced. But yeah, I would try to find out why it takes so long. Do you take too many notes? That could be if you record too many price details about your trade, that could be an issue that is holding you up. With your backtesting data, you don't need to get really into the absolute nitty-gritty. So it's okay to just keep it on a very basic surface level, to just get an idea for the strategy and see many setups. And then next step is then you trade in a real market environment. The backtest is just really there to give you a lot of reps without any money involved and to speed up the charts. All right. I see Bali's typing. Let's wait for him. After the breakout, how I know that it's a valid breakout, but after hit stop. Well, you never know in advance, obviously, yeah? Because both are the same. Just one time the market goes back to your top and the other when it doesn't. That's just the nature of trading, right? If the breakout looks identical, there's no way of knowing what the market is going to do in the future. We never can predict the future, whether the market will actually follow through or not. Unfortunately, we don't have a crystal ball that's telling us the future. Well, what you could be doing is, this seems to be just if, for example, you have a fair value gap in here and you have a 1, 2, 3 pattern, like what I've shown you today with my trades, that could be a starting point, right? You look for just confluence here. This might be an absolute valid trade as well. You have to break out, and then let's assume here's a fair value gap. You go short here, and this didn't work out. Totally fine. Not all of your trades will work out. If you can get half of your trades to work, that's great. And for the other half, we are using our reward to risk ratio to put the odds in our favor. Yeah, well, that's obviously, yeah, you don't have a lot of context here. Maybe we are coming from an uptrend or something. Assuming this is an uptrending range, maybe distribution. But my point was more in general that you don't know in advance what is going to happen. And you just have to take the setup. If the setup is valid, you take it. If you lose, you lose. If you win, you win. But there's no way of predicting what might or might not happen. If you have a breakout, the market pulls back into your fair value gap or gives you a 1, 2, 3 pattern, great, you take it. If it doesn't work out, then you have your stop loss. If it works out, you hold onto your reward to risk ratio to make it worthwhile over the long term. That's really what it boils down to. The Aussie Swiss didn't work out for me, but I would take the trade again. I reduced my loss, and that's fine. I think the trade overall was totally valid. Everything was there. Same here. I don't see a big difference between the two trades. The US dollar Swiss might have even been a little bit more aggressive. It did work out, okay, but there was no way in knowing which of the two would have worked out. Both are valid setups, and that's the only thing that matters. You're welcome. All right. I think we covered a lot of ground today. If there are any questions coming up in the meantime, you know to put them in the questions channel. I'm always active there. And you will hear from me again on the weekend. Not sure. So this week is not going to be so late as last week. Probably going to be somewhere during Sunday. But yeah, the webinar, the watcher is going to come one way or the other. So wish you a good remaining week. Check the news calendar tomorrow. We do have a lot of news coming tomorrow. So make sure to keep an eye on that. And I will see you again shortly. Great job, Ali. 70% is good. Yeah, sure, you can do whatever you like. Maybe you can stay a little bit longer and refine your strategy in here first. But the peak traders will be a similar approach, just slightly different. All right. So I wish you a good rest of the week. If there are questions, you know how to reach me. Thank you again for your time today, and we will talk again shortly. Bye-bye.